Comments are two huge Bitcoin signals. Let me know that I'm ready for my next big trade on the daily time frame. As you guys know, I've been ready for this relief rally for quite a while. In terms of my long-term portfolio, we've been all but set. I made the video weeks ago saying I'm all in on this market. I've dollar cost averaged my way in, and I would not be comfortable in this market. But now, finally, we've got that breakthrough on a key level for me to enter a short-term trade. For those of you interested in a short-term trade, here is what I'm taking for education purposes only. If you want to, please do your own research before taking any trades. As you can see, we've been looking at this 24k level for a very long time, and finally yesterday we got the much anticipated breakthrough. But it doesn't come without its warnings. And this is the beauty of trading, right? Trading is an art with science at the end of the day, right? You can line up all the facts as much as you want. At the end of the day, you've got to make a judgment call. Not me, not another YouTuber, not some moon boy. You've got to make a judgment call based on all the data you've got so far, whether to take a trade or not. And that's what makes it so emotionally involving. And that's what makes it so fun and exhilarating at the same time, which is why I can't stop trading. Right, so this is the trade. You can see we're waiting for this breakout of 24k. We failed many, many times, and we were super patient whilst moon boys were claiming this is going up to 48k. Now, what was different this week? Well, on this big candle here on the 11th, a couple of days ago, we got the CPI reading and we started running past. And I made the video very clearly saying, wait, guys, wait for the daily close, please wait for that daily close. And as you can see, the bears finished it again. Yesterday opened up green again. I said, wait, keep waiting, wait for the daily close. We've got the daily close, and now we've got the confirmation candle. Now, a confirmation candle is waiting for the candle to be green. Now, ideally, for this to be a perfect entry, you wait for it to wick above the high from the that previous rejection point, the high there, and that high is at 24,900. Now, this is where some subjectivity comes in, which a lot of people won't tell you, right? The reality is a lot of people say, yeah, just jump in the trade. Now, I know that every single person here will have a different risk tolerance. They'll be trading with a different amount, and it means a different amount to them and their different level of experience. So you've got to make your own personal decision. I've entered this trade. I'm in this trade. And that's the risk you've got to take. Now, I know this could be easily wrong. We could be thrown back into the pattern. I've got my stop loss ready. I've got my take profit ready. They're all on CoinPanel, which you guys can check out. They have a free setup which you can use to sign up. And I think you have to turn into a paid subscription afterwards. But you can see my trade set up for free. So do head it into CoinPanel. I've set all my take profits and my warning zones with all my annotations on there. So definitely do go check that out. Links in the description for CoinPanel. So as you can see here, we've got that, but I do want to see a bigger confirmation candle here, right? It was looking better a little while ago, and it's kind of getting rejection today. We've got 13 hours on this candle, and you can enter based on your preference, right? It's your preference on how you want to take this trade, and you've got to take risk with it. You've got to have a tight stop loss like I share on CoinPanel, and you need to expeditiously be taking your take profits. Now, this is not the only thing that's making me enter the trade. Remember, I want to reiterate, my long-term positions are in there. I know a lot of you guys aren't interested in short-term trades. Absolutely fine. The vast majority of my wealth is in long-term positions, and I've been holding all the way down and dollar cost averaging in and making sure I'm in the market. So I'm in the market. I'm not missing out in terms of my big bag of portfolio, but this is an extra trade I want to take. And you guys take a trade. If you guys want to take a trade, sorry, you do so based on what's good for you. Is it 1% of your portfolio? Is it 0.5%? Is it some lunch money? Is it some coffee money? Is it something a bit more serious because you're a bit more experienced? That's completely up to you. So I'm taking this as a separate trade, and I'll be looking to take profits on this trade. So when I say that I'm looking at this on the weekly EMA ribbon, okay, so let's bring out the weekly EMA ribbon, and I'm seeing the resistance coming in around that 30k level, where between 28 here at the start, 28 and a half, going into that 30, 32 level. That is where I'm expecting a bunch of resistance to come in on this relief rally. So I'll be looking at that very importantly. Now, you're also seeing a bunch of resistance coming in from this 200 EMA as well. So you need to keep an eye on this as well, the teal colored line. That's where we're getting pushed down here slightly today. So that's what I'm looking at in terms of my short trade. At that point, I would not be touching my long-term position. I just want to make sure everybody understands that. I will not be trimming my long-term position. When I'm selling into this EMA ribbon or taking profits, that's on my short-term trade. I'm riding my long-term position, because what can happen is you can have a bear market rally, which is what this is, okay? Please, let's not get confused. But this is a bear market rally. On the weekly time frame, the bears are still in control. This is a rally within the controls of the weekly time frame of the bears. Very important that we understand that, okay? So we understand where we're at. We don't fall out of perspective of where we're at. And it's good. We've got good control here, but we're just here within this of the bears, okay? So let's keep that into perspective. But I understand that once you have this type of bear market rally, you can very easily flip it into some sideways action, which is now neutral, so the bears are no longer in control, or you can straight away flip it straight into where bulls are in control and you can go on your next run. So I'm holding my long-term bag to see if we can flip our weekly EMA ribbon post a potential bear rally. Just giving you my game plan. None of this may play out. We may just get thrown back to the downside. My stop loss gets executed and we end up back in the channel because we're still in the bear's control. Okay, so hopefully you guys are following what I'm saying here. Now, there's another indicator which flashed, which is hugely important, which I have to share with you guys because I love confluence. Remember, confluence is when you're entering a trade and a few different things are showing you the same pattern. And I love that when that happens. So let me just head on over to the daily chart. And what I want to show you here is, and before I forget, by the way, volume on the breakout yesterday was not the best. I do have to mention that we do have weak volume, and that's another concern. But again, you've got to take a risk at some point in a trade. So that is something I'm learning to live with in terms of trading. I'm saying, look, that volume is not the best. I wanted more skyscraper volume, at least something like that. But you can't get everything all the time, and you've got to make a judgment call. So what did I want to show you? I want to bring out the EMA, the 20 EMA. I want to bring out the 50 EMA. So these are both exponential moving averages. And if any of you have checked out my crypto trading education program, I explain this. This is the basic exponential moving average crossover. When the shorter time frame EMA crosses the longer time frame, so in this case, the shorter one is the yellow one, the 20 moving average, crossing above the white one. This indicates a big bullish move. Look at this previously. It crosses, big move to the upside, okay? And opposite is true. When yellow crosses over the white one to the downside, big move to the downside. Now look what we've got, guys. We are finally, with that breakout yesterday, getting to the point where the yellow is crossing back above the white. Really good confluence with the ascending triangle, which we were just looking at on the previous chart. Looks really, really good from here, okay? So you've definitely got that crossover playing out as well. Let's also take a look at this version of the chart, which I was showing you. Remember, every time we're having a consolidation in these channels, breakout, consolidation, breakout, consolidation, breakout. And then this consolidation, this breakout was supposed to take us up towards 26, 27,000. And we did have a bit of a stutter in between here. I mean, if I show you the Farley chart, you will see we did have a bit of a stutter. It wasn't a clean break to the upside like these ones were. These were a lot more aggressive. We've gone a bit more shallow on the gradient here, but we're progressing well towards the price target. So this pattern is looking pretty decent for the time being as well. Marry that up with a bunch of positive macroeconomic data we saw yesterday, and suddenly you understand now why FOMO is starting to kick back in. You're getting a lot of people who aren't believing this pump, but at the same time, you're getting a bunch of people who really want to double down in on this, and Fear and Greed Index is sitting back at 46. This is one of the highest scores we've seen in a long time and shows that the sentiment is reversing. Couple that with the fact that the stock markets had a positive week, ending the week in the green. Nasdaq was up 2% yesterday. We covered that off in yesterday's video, and the market's starting to now hope that inflation is peaking, Jerome Powell is in control, we still have a strong labor market, and that is the rhetoric they're going after. So finally, we have some macro to back up our thesis around a bear market rally. But let's just remember, this is a rally which we can trade up towards 30K, of course, but it is still a bear market rally. So I don't want anybody to start getting confused of where we're at. Also, just want to mention, it is really not helpful to get caught up in all of this game, particularly on crypto Twitter and YouTube, where either you're a perma bull or a perma bear. Just let the data guide you. When the data is showing something bearish, we will share that and we will look at it and we will make a judgment call based on that time. As the data evolves, you evolve. I don't know why people want to put buckets into people. Oh, he's the permanent bear. Oh, he's the permanent bull. Like, that's not how you invest. That is not how you trade. And that is not the way people do it in traditional finance neither. So I don't know why this is happening in crypto Twitter, probably just for the entertainment purposes, but it's not helpful and it's not relevant. Like, you're okay. You're a good trader, a good investor pivots based on new data. Every investor is doing that every single day. If that wasn't true, why are we listening to Jerome Powell? Why are we looking at inflation? Why are we looking at the stock market? Why are we looking at any of this data if you're a permanent bear or a permanent bull? You don't need data. So don't get caught up by any of that noise online. Follow the data. Pivot as and when the data changes. If the data changes and says this is failing and it's going to break down, make sure your stop loss is there, make sure it's executed, and you regroup and look for your next move. Hope you guys enjoyed this video. Don't forget to check out Coin Panel for my exact entry point zones and the take profit levels that I've set along with some annotations. I will be updating charts on there regularly, so do check that out. You've got a free trial on there which you can use. Link in the description to get that. Thanks for watching, guys. Go watch this video here, and I'll see you in the next one.